Hey everybody, welcome back to the channel. We are back on another episode of Daily Palantir, and we have got a decent number of things to talk about today in regards to Palantir. Number one, Palantir switching their stock exchange from the New York Stock Exchange to the Nasdaq. The implications of that are actually very important, so we're going to talk about that. Number two, Palantir, Rio Tinto, a client they had back in 2021. They started working with them, a new multi-year partnership that was extended. Rio Tinto now becomes one of many other companies that have extended their partnership with Palantir, so we'll be discussing the implications of that. And then finally, Bank of America, about a week ago, they upgraded Palantir to $55. Palantir right now after hours is $61. That price target upgrade, some very important notes Mariana, the analyst at Bank of America, had to say, so we're going to be talking about that. Let's get into it. All right, so the biggest news after hours, I was completely caught off guard with this. I did not expect this to happen. I tend to be someone who is updated a lot with Palantir, and I had no idea this was happening, but this is what ended up happening. Here we go. Palantir announces a transfer of their stock exchange listing to the Nasdaq. Why does this matter? Well, first of all, let's read from the press release right here, and then we'll keep going from there. Palantir today announced that it will transfer the listing of its Class A common stock to the Nasdaq Global Select Market from the New York Stock Exchange. The company expects to begin trading as a Nasdaq-listed company on November 26, 2024, which is about 10 days from now, and its common stock will continue to trade under the symbol PLTR upon transferring. This is the most important thing. Palantir anticipates meeting the eligibility requirements of the Nasdaq 100 index. Now, that is really important for this particular reason. The Nasdaq 100 index is the QQQ. The QQQ, which a lot of you guys probably know about this, if you follow the channel, follow the market open, follow the market close, you know that this is one of the largest ETFs in the world in terms of this year, 2024. It was the fourth largest ETF in terms of inflows with $27.8 billion added. Again, there's a lot of ETFs in the world. Fourth largest ETF was the Nasdaq, and it has over $318 billion in assets under management. The QQQ has Google, Amazon, Microsoft, Nvidia, Tesla, all the big tech companies are included in that Nasdaq 100 index. And now Palantir is not included in the index, but because they're switching their listing from the stock exchange in New York to the Nasdaq stock exchange, that gives them the eligibility requirements. They have everything else that they're eligible for in terms of requirements to get included into the queues. Now, when is that going to happen? No one fully knows yet. There is a date out there that says December 20th. That might be the next rebalancing date where they can get included. I don't know if that's confirmed or not. Maybe it happens in early 2025. Maybe it happens in mid 2025. No one knows exactly when it happens, but the stock is up 3% after hours. Why? Because people are now perceiving that it is going to happen eventually. And if it does happen, obviously that's very bullish. Why is that bullish? Well, we're in the S&P 500. That inclusion as of September 6th was very, very bullish. The institutional numbers came out today as well. We are now 53% institutionally owned for Palantir, which means for the first time ever, the float went from 60-40 retail, having 60%, to 53-47, 53% being institutions. What does that mean? Well, number one, that means S&P inclusion created the institutional buying that everyone thought was going to happen. But number two, it means other indexes, other ETFs are getting excited about owning some bit of Palantir. And the Nasdaq, given Palantir is now going on to that exchange, that may be the next big thing that Palantir gets into, which from an institutional perspective would be very important because all of those inflows that are coming into that ETF, a bit of them would be biting off a little bit of Palantir, given those ETFs are buying a little bit of every single company, or those inflows are buying a little bit of every single company that's in the ETF. So that right there is very, very, very important for Palantir. And that just means that institutional ownership can continue to rise. Now, does that mean the stock's going to go even higher, go to the moon? Like, obviously not. None of us even thought, I think, that S&P inclusion would take it all the way up to $60, but here we are. But that is net bullish long-term because one of the biggest gripes that a lot of people have with Palantir, or that they did have with Palantir, is that it's a retail frenzy stock, that retail owns a lot of it. And, the toots aren't really involved. And this is just super fanboys that love Palantir. Well, a lot of those fanboys have made a lot of money because they've been invested in Palantir way before the toots came in. And now we know, as per Robinhood's data, Robinhood tells you how retail traders are net sellers and net buyers of a stock. Over the past couple of weeks, retail has been net selling Palantir, and they've been dumping their shares onto institutions that have been paying 5 to 10x more than what retail ended up buying those shares for. So in general, this is net bullish long term. No one can say that Palantir is now a retail frenzy stock because obviously if the majority of the institutional or the majority of the float is institutions, then it's not retail frenzy. And my thesis has been confirmed over the past couple of weeks, which I've been very stubborn about this idea that retail's not moving the stock up $50 billion. Basically, over the past couple of months, we've added $40 to $50 billion in market cap. That's not retail. $40 to $50 billion did not come from retail. Like I just refuse to believe that. And it seems like, at least for part of that, I was right. I mean, institutions have been net buyers of the stock now that institutional ownership went from 44 to 53. So you're talking about a 9% increase. That obviously means that there were more buyers in the institutional side than there were sellers. I'm not saying retail didn't participate in this rally. I'm sure there's a lot of new retail investors that are in the stock. Some of you guys might be new to the channel, but I definitely think the institutions played a bigger role. So overall, this is super bullish. It's a big deal. I don't know if this means the stock has to go up on this after hours. Right now, the stock is up on this news, but in general, the shorts are not having a fun time with Palantir because every time you think there's a little dip, every time you think things are getting a little overheated, I know the valuation at $60 is expensive. I get it. I've talked about that extensively, but momentum is momentum. And right now the institutions feel that the momentum is behind Palantir, and that's why they continue to buy this stock. All right, next piece of news today. This was also a very, very important piece of news that came out yesterday. Palantir and Rio Tinto have renewed their partnership. Now, put in the comments if you knew about this original deal. This was from 2021, is when I was one of the first videos I made about Palantir and I learned about them. But Palantir and Rio Tinto renew enterprise contract and extend access to Palantir's AIP platform. Palantir originally signed a multi-year agreement with them back in 2021. Now that we are in 2024, that deal is probably ending. They are extending that partnership for 4 years and giving ongoing access to Palantir's AIP. As an early adopter of Palantir Foundry, Rio Tinto has already primed its operational landscape through the deployment of AI through the creation for a robust digital twin, or the ontology. Via the ontology, AIP will enable Rio Tinto to build, test, and validate AI use cases at an accelerated pace and deploy them to production safety. As we can see right here, this is kind of the core Palantir thesis, the AI use cases that the market feels many software companies don't really offer, but Palantir does, probably why Palantir is trading at a premium, is why Rio Tinto is continuing to sign onto Palantir. These AI use cases will follow and augment critical operation workflows Rio Tinto conducts in Foundry today, from managing plant operations to monitoring geotechnical risks to coordinating dozens of unmanned trains carrying iron ore. Foundry is enabling Rio Tinto to make well-informed decisions and take appropriate actions based on a single unified source of truth. Why does this deal matter? A couple implications. Number one, Rio Tinto joins a variety of other companies, including Eaton, Tampa General Hospital, and BP, that have extended their relationships with Palantir. So we are seeing, and I'm sure there's other companies that we have not heard about publicly, but we are seeing some of Palantir's biggest clients that have already, as the press release says, primed our operational landscape with the ontology, with Foundry, now say, hey, we want to keep this and we want to layer on top AIP. And that is, I think, the acceleration of commercial growth that we're seeing in the United States for Palantir. They are upselling AIP. Their average revenue per client is going up as well. And the reason it's going up, 2 quarters in a row it's been going up, is because they've been able to get these clients to say, hey, we want to get AIP. The biggest question a year and a half ago was, can they monetize AIP? Alex Karp said on the earnings call 18 months ago, we don't have a plan for pricing. We're just going to take the whole market. Well, if you're going to take the whole market, you've got to eventually be able to monetize the market. And it looks like Palantir, instead of focus on just getting net new customers, they're focused on genuinely developing relationships with their current clients, upselling them, and showing that the value is worth paying for, and it's probably worth paying a little bit more for when it comes to AIP. Now, this is also congruent with what Karp said on the earnings call just a couple of weeks ago, or last week, about we don't need to have 10,000 customers. He said this verbatim. We just want to work with the best clients. And I think what Karp means there, some analysts would look at that and be like, oh, that's ridiculous, right? You should want as many customers as possible. And I don't think Karp's saying we don't want 10,000 customers. I think Karp is saying we don't need to have 10,000 customers paying $20 or $40 a month and show you that we have this big SaaS company. We need to have enough customers that feel that Palantir is worth actually paying for. Not just like giving a couple $1,000s, but like saying, hey, a couple million a year because we genuinely believe in them and we want to be with them for the long term. A long-term business is judged based on your ability to survive for the long term. And it doesn't look like Rio Tinto or BP that extended for 5 years, Tampa General extended for 7 years, Eaton. These companies are not leaving if they're working with Palantir. In fact, they're expanding the scope and use cases of Palantir throughout the entire part of their organization. Many of these companies, global enterprises, and so other geographies are also starting to get onboarded to Foundry and AIP. That's a big commitment. That's a lot of work. That's a lot of training. That's a lot of development with the forward deployed engineers. Like, that's not easy to do. And the fact that all of these companies want to start working with Palantir, I think it underscores what Karp was talking about actually delivering value, giving more than you take, and as a result, building a business for the long term that I think investors should feel confident will survive, because they're just going to have every customer that joins eventually decide to pay more money to use Palantir. I do think Palantir will be able to get to hypergrowth when it comes to customer count, but in these early stages of them really trying to take over the market when it comes to AIP, you don't want to just get 100,000 customers to say you have 100,000 customers. At that point, what's the moat? How does the market interpret that? How do you monetize them? How do you give them the quality and attention and care that they need so that they continue to work with you and actually pay you what you deserve? You can't do that with 100,000 customers. You have to do that in gradual stages. Eventually, you can do that if you hire thousands of more people. But right now, Palantir is less than 4,000 employees. So to me, I think it's incredible how they're doing this strategy. And the fact that they're getting the renewal of these contracts only underscores a broader importance that they ultimately have on customers. Last thing I'll say on this is Rio Tinto is in the energy space. Palantir, healthcare, very big vertical. We saw a lot of deals in the beginning of the year when it came to healthcare. Energy, we're seeing a lot more deals as well. BP just extended, Rio Tinto just extended. It makes sense that energy is another vertical that Palantir is going after. All right, final thing we have to talk about today is Bank of America. I didn't get a chance to talk about this report when it came out 2 weeks ago, but I think it's appropriate now to give this report some attention and try to get deeper into this. Bank of America says a juggernaut is emerging, infrastructure that unleashes the power of AI, upgrading our price target from 50 to 55. So I just want to read a little bit from this. First two paragraphs kind of does the gist of it. I'll put the link in the chat on Twitter for anyone who wants to read the entire report. But these are the first two paragraphs, and then we can analyze what it actually means. The power of compounding use cases. We noted previously, Palantir adopting the go-to-market strategy launching AIP bootcamps could unlock the sell-through scale many bears questioned was possible. In 3Q, Palantir saw 54% year-over-year growth in U.S. commercial revenue and customer count up 77% year-over-year. We continue to view the adoption of Palantir's AI-enabled products and its reach in its early days as more companies realize the time, resource, and cost savings are possible. In our view, Palantir's moat as the differentiated agnostic AI enabler is only growing with each new use case carrying compounding unit economics. We reiterate our buy rating, increase our estimates, and our price target to 55 from 50. So that paragraph right there, basically Mariana, the analyst at Bank of America who has understood Palantir since they were $7, is basically saying their moat is that they can work with anybody, any cloud hyperscaler, any client, any vertical, any industry, and create use cases. The whole promise of AI and all these GPUs are use cases in the enterprise, unlocking these multi-trillion-dollar value sets that the market believes is possible to achieve over the next decade. If Palantir is one of a handful of companies, maybe one of the only companies currently that the market really thinks can unlock those use cases, that is worth a premium, and that's why they upgraded their price to $55. Next paragraph. The next war will be decided by the better iterator. In May, the Biden administration put forward a memo of advancing governance, innovation, and risk management for agency use of artificial intelligence. In October, a new memo was published. The new memo defined AI as the era-defining technology with significant and growing relevance to national security. Additionally, the memo now puts U.S. AI capabilities as a national security priority and a technological edge that the U.S. cannot lose. We see Palantir's U.S. government growth as 40% year over year, that was in Q3, as a testament not just to the government putting their dollars where their priorities are, but just how differentiated Palantir's capabilities are compared to peers. We continue to see upside to Palantir's U.S. government growth given the increasing AI initiatives and evolving government software procurement. Again, I'll link this in the description and everyone can read the other parts of the report. But those were the two main parts. Number one is AI use cases in the commercial sector. That is what gives Palantir a premium. And number two is that 40% government growth is really, really juicy and exciting. On my Palantir recap video that I made on Sunday, that was one of the main stats that I talked about. 40% government growth, I didn't expect. This year, that number was 6% in the U.S. Now we're looking at 40%. That is a hell of a change, and that's because, as Mariana says, the U.S. government does not want to lose when it comes to AI. I think the next Trump administration is also not going to want to lose when it comes to AI. And Palantir has some of the best AI products that the government is starting to realize. If the government's starting to realize that, and they're upping their spend, and Palantir has the differentiated product that can actually serve the government. By the way, they have IL level 6 security clearance. They're one of 3 companies, along with Microsoft and Amazon, that have the ability to offer that. then I think they're going to get a lot more government deals. And that revenue is sticky. That revenue is not going away. That revenue is a multi-decade tailwind when it comes to maintaining supremacy, when it comes to AI, especially against Russia and China. That business alone, I think, is very, very special. I think it's underrated. And I think the market probably is looking at it as not something they're scared about when it comes to Palantir being a defense contractor, but something that adds to Palantir's moat, along with this U.S. commercial business that's growing rapidly inside of the United States. So overall, I think the $55 price target for Mariana, and you can look at her EPS estimate, she's looking towards future years and just pulling forward some growth and saying, all right, if you put a multiple this way, this is how you get to 55. I think it's broadly based on the narrative and story that Palantir can unlock use cases. They are a juggernaut when it comes to opening new aspects of technology for enterprises. And the government business is sticky. It's growing 40%. It's probably going to keep growing. And as a result, that's how you get to Palantir being one of the most important software companies in the world. And the market at $61 is starting to recognize that as well. All right, that's it for me. Thank you, everybody, for listening and watching. Hopefully you guys enjoyed. Let me know your comments down below on what you think of Palantir potentially getting into the Nasdaq QQQ, this Rio Tinto deal, and what it means for clients continuing to extend their partnerships with Palantir. And then Mariana's Bank of America $55 price target. And also, do you think 55 is too conservative? Do you think it's too high? Do you think we're going to be trading much above that? Kind of how do you think currently of the price target and the stock action of Palantir? Earnings was great 2 weeks ago. Stock's at $61 right now. It was at 40 on earnings. So obviously the stock has had a hell of a run, and we are going to hopefully continue to see strong momentum, not only in the stock is whatever. It can go up and down. Everyone has to deal with that. But the business itself, Palantir is hosting their DevCon, their first annual DevCon right now. They've done 5 AIP cons. Now they're doing DevCon. I'll leave a link in Twitter so you can see some pictures from that from our boy Chad, who put out some pictures. But a lot of stuff is exciting underneath the hood with this company. And I think the broader market just wants to participate in it, which is why Palantir is seeing some momentum. All right, that's it for me. Thank you, everybody. I'll see you guys on the next one.